Your credit score isn't just some random number that pops up when you're trying to get a loan. It's actually one of the most powerful tools that determines your financial future, and most people have no idea how much it's quietly controlling their lives behind the scenes. Let's start with the obvious stuff first. When you want to buy a house, your credit score is literally the difference between getting approved for a mortgage and being told to come back in a few years. But here's where it gets interesting, and this is something most people don't realize. Your credit score affects way more than just loans. Landlords check your credit before letting you rent an apartment, which means a bad score could leave you stuck in a place you hate or paying higher security deposits. Insurance companies use your credit score to determine your premiums, so you could be paying hundreds more per year on car insurance just because of a number you rarely think about. Some employers actually check credit scores during the hiring process, especially for jobs that involve handling money or sensitive information. Think about that for a second. Your credit score could literally cost you a job opportunity. Now here's the part that really gets me fired up. The difference between a good credit score and a bad one can cost you tens of thousands of dollars over your lifetime. We're talking about the difference between a 4% interest rate and a 7% interest rate on a $300,000 mortgage. That's an extra $200,000 in interest payments over 30 years. $200,000. That's enough to buy another house in many parts of the country. Let me break down exactly how credit scores work, because this is where most people get lost. Your credit score is calculated using 5 main factors, and understanding these is like having the cheat codes to the financial system. Payment history makes up 35% of your score. This is simply whether you pay your bills on time. Credit utilization is 30%. That's how much of your available credit you're actually using. Length of credit history accounts for 15%, basically how long you've had credit accounts open. Types of credit make up 10%, having a mix of credit cards, loans, and other credit types. And new credit inquiries round out the final 10%. This is how often you're applying for new credit. Here's what blows my mind. Most people think you need to carry a balance on your credit cards to build credit. That's completely wrong, and it's costing people thousands of dollars in unnecessary interest payments. You can have a perfect credit score while paying off your cards in full every single month. In fact, that's exactly what you should be doing. The credit utilization part is where people mess up the most. If you have a $10,000 credit limit and you're using $8,000 of it, that's 80% utilization, and it's absolutely destroying your credit score. You want to keep your utilization below 30%, but the sweet spot is actually below 10%. Some credit experts even recommend keeping it below 1% for the highest possible scores. But here's something else that might surprise you. Your credit score affects your ability to start a business. Want to get a business loan or a business credit card? They're going to look at your personal credit first. So that side hustle or entrepreneurial dream you've been thinking about. Your credit score is either going to make it possible or make it 10 times harder. Let's talk about some of the hidden ways your credit score impacts your life that nobody talks about. Utility companies check your credit when you're setting up service. If your score is too low, they'll make you pay a security deposit just to turn on your electricity or internet. Cell phone companies do the same thing. Bad credit means higher deposits or being forced into prepaid plans. Even some streaming services and subscription companies are starting to check credit for their premium services. Your credit score is becoming the universal measure of financial trustworthiness in America. And let's talk about relationships for a minute. More and more people are checking their partner's credit score before making major financial decisions together. Bad credit doesn't just affect you. It affects your spouse, your family, your kids' college plans. It's not romantic, but it's reality. When you get married, your credit scores don't merge, but they definitely impact each other. If one spouse has terrible credit, it can prevent the couple from getting approved for a mortgage, even if the other spouse has perfect credit. This is why financial compatibility is becoming just as important as emotional compatibility in relationships. Now here's the really frustrating part about credit scores. The system is designed to keep people trapped in cycles of bad credit. If you have bad credit, you get charged higher interest rates, which makes it harder to pay off debt, which keeps your credit score low. It's a vicious cycle that millions of Americans are stuck in right now. But here's what's really frustrating. Improving your credit score isn't rocket science, yet so many people just ignore it completely. Pay your bills on time, keep your credit utilization low, don't close old accounts, and avoid opening too many new accounts at once. Those 4 things alone will put you ahead of probably 70% of the population. The crazy part is that your credit score is constantly being calculated and updated, but most people check it maybe once a year if they're lucky. You should be monitoring this thing like you monitor your bank account. There are free tools everywhere. Credit Karma, your bank's app, even your credit card companies give you free access to your score. Here's a strategy that most people don't know about. You can actually call your credit card companies and ask for credit limit increases. This immediately improves your credit utilization ratio without you having to pay down any debt. If you have $5,000 in debt across cards with $10,000 in total limits, that's 50% utilization. But if you get your limits increased to $20,000, suddenly you're at 25% utilization and your score starts improving. Another thing people don't realize is that closing old credit cards can actually hurt your credit score. Even if you're not using a card anymore, keeping it open helps your credit utilization ratio and your average account age. The only time you should close a card is if it has an annual fee and you're not getting enough value from it. Let's talk about credit repair for a minute because this is where people get scammed the most. There are entire industries built around charging people hundreds or thousands of dollars to fix their credit. Here's the truth. There's nothing a credit repair company can do that you can't do yourself for free. They're going to dispute negative items on your credit report, which you can do by writing letters or using online dispute forms. They're going to negotiate with creditors, which you can also do yourself. Save your money and put it toward paying down debt instead. The most effective way to improve your credit score is also the most boring: time and consistency. Pay your bills on time, every time, for months and years. Keep your balances low. Don't open new accounts unless you really need them. Check your credit report regularly for errors and dispute them when you find them. It's not sexy, but it works. Here's something else that might surprise you about credit scores. They're not just used in the United States. If you ever want to move to another country, many places will want to see your credit history as part of immigration or visa applications. Your credit score is becoming part of your global financial identity. The good news is that, unlike a lot of other financial metrics, your credit score is completely within your control. You don't need a high income. You don't need to come from money. You don't need special connections. You just need to understand how it works and be consistent with good habits. I have seen people go from credit scores in the 500s to over 750 in less than 2 years, just by following basic principles consistently. The key is treating it like the long-term investment it actually is. Every on-time payment is an investment in your future. Every dollar you pay down in debt is an investment in lower interest rates down the road. Every month you resist the urge to open new credit accounts is an investment in your credit stability. Start treating your credit score like the financial superpower it actually is. Check it regularly, understand what's affecting it, and make the small changes that lead to big improvements over time. Your future self will thank you when you're getting approved for that dream house at a rate your neighbors can only wish for. When you're starting a business with access to the best financing options available. When you're paying lower insurance premiums and getting approved for apartments without massive security deposits. This isn't just about money, it's about freedom and opportunity. A good credit score opens doors that you might not even know exist yet. A bad credit score closes those same doors before you even get a chance to knock. The choice is yours, but the impact of that choice will follow you for decades. Make the smart choice starting today. If you found this helpful, make sure to subscribe because we're posting new videos every single day about building real wealth and making smarter financial decisions. Hit that subscribe button, and I'll see you tomorrow with another video that could change your financial future.